Portfolio Builder members, welcome to our Friday Trade Alert. Friday's payday for the SPY ETF. Let's review the last trade alert we gave out. We'll take a look at our total portfolio strategy, how we have our assets allocated, and then look at the big news coming up next week. Really quickly, I want to show you one chart, and this is probably the only chart that matters in the world right now. And you got it. That is the Fed's balance sheet has increased by $200 billion. So we'll take a bigger look at that in a little bit. But that's why I've been telling everyone to buy the dip in the SPY, to have some confidence. And now we're enjoying the profits from that confidence. While a lot of people were freaking out, we knew what was coming. So let's just take a quick look at the most recent trade. Yesterday we pulled some major profits on the TLT, GDX, and SLV. And you can see we're now sitting at a 0.9% return in October. I think that ticked up to 1% because Trump was on TV talking about the trade talks with China Monday and Tuesday. And so we'll take a look at all of this. Let's just review the most recent trade. The bottom line is the SPY traded from 287.88 to 292.38 for a gain of $4.50 a share. This was during a risky time when the stocks had been selling off, so we did a slightly more defensive trade that did pay off, but it cost a little bit on the protection side. We had to pay $1.46 for our option caller, which also had a long call built into it. And we had to pay another 89 cents to get out of that trade today. So we gave up $2.35 of our potential $4.50 profit on the SPY. And that's because, again, stocks were crashing. We had bad data coming in this week. And so net profit was $2.15 a share on 1,700 shares for a profit of $3,655. Now on our $1.45 million portfolio, a 0.9% return is approximately $13,405 of profits in just the 4 days. And this is doing it very conservatively without risking a lot. So let's take a look at the trade alert we gave you Wednesday so you can see how this worked out. Here was the trade alert. Normally we don't buy call options, but the market had sold off so significantly that I was expecting a sharp jump up to the upside. Now, in the same breath, because of the increase in volatility, our ability to hedge the downside became dramatically more difficult. If we had simply just bought our normal put option at 287, we would have needed a $2 jump in the SPY just to get to break even. And so that would have also given us a potential dollar risk below that 287.92 you can see up in this corner where we were trading at. So this was the trade alert given Wednesday. We sold the 288.50 call option for a credit of $1.87. We used that to finance our downside protection for $1.75, which means we have a long put at 287, and that would be the least we could get for our blocks of 100 shares of the SPY. So without the call option below that we went long, we had a pretty tight caller on there. So a 288.50 short call. This was about 60 cents above the current trading price when we entered that trade. And then we had a 287 put, about 92 cents below. So again, the call option financed the put option and gave us the safe setup so that we could play the upside with our long call. Now, this is not our normal trade alert and not what we're doing today. But here's your risk chart, and you can see we had a maximum risk. The most we could possibly risk during this scary time was $1.97. People were wondering if this was going to be the big crash, and again, we told you buy the dip, put your options on to protect the capital, and you can see that long call gave us the potential for big profits today. And we hit it. We hit a nice profit, much larger than normal. So again, this is how easy the program is to trade. Monday, Wednesday, Friday, we trade the SPY at noon Eastern. You know exactly when the trade will come out. The trade takes seconds to put on. We sold to open a call above the trading price. We bought a put below. And then again, the extra on Wednesday's trade was the long 290 call. Let's look at how we got out of that trade today. Buy to close the 288.50 call, and that was a loss. We had to pay $391 to get out of that. Sell to close the 287 put, another loss there, no problem. And then we were able to sell to close our long 290 call option for $3. So a little bit of profit on that. The big gain, of course, was from the SPY appreciating. And so if we go back up, you can see how to audit those returns. You track the change in price of the underlying asset. We gained $4.50 on that front. On the caller, we ended up losing $2.35, but that's how we protected ourselves. And we walked away with a $2.15 profit on 1,700 shares for a profit of $3,655. Now, by the time you're getting the trade alert, the SPY is actually a bit higher. Let's take a look at the SPY right now. And so we are significantly higher than when I took my screenshot. Trump was on TV as I took the screenshot talking about the trade deal next week. So you've got an extra 80 cents of profit that's not calculated in my shot, and it keeps going up. So good job for all you guys. Today's new trade alert is similar, bullish on the SPY. What I want to do right now is take a quick look at our program, and then we'll jump into the big news that's affecting our trade alerts. Real quickly, just see who's in our chat. Tom, welcome. How's it going? Can you let us know if you're making money with the program? He says, Dean, the strategy is working well. That's good, Tom. So you have the TLT, you have the whole setup, the entire strategy? And I'll go back to the chat box in a little bit. If you're listening live, please communicate with us in the chat box. We love getting to hear back from our members, especially if you're making money, so that other people listening in can realize if this is the real deal or if we're just blowing smoke. All right, guys, here's our little intro, and then we'll jump into the meat of the presentation. Extremely easy, on the go, 30-second daily retirement income trade alerts. Target return of investment is 1% a month, and we've only had one losing month of negative 1% with an average of 1.6. For every $100,000 invested, our goal is to generate $1,000 profit per month. And if you're not excited about 1.6% return on average per month, realize your broker will give you 2-to-1 buying power. So if you were to just simply double your position sizes, your maximum drawdown would have been negative 2%, not too bad, and your average gain would have been 3.2% per month. For every $100,000 invested, our goal is to generate $1,000 per month profit. Income and safety, not growth or speculation. Our simple 4 ETF portfolio is extremely diversified and all you'll need for your retirement. It's time to simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. My promise to you is I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. And remember, for every $25,000 you deposit at most brokers, you'll have $100,000 of buying power. Here is the trade allocation per $100,000 that we currently recommend. You'll trade the SPY at noon Eastern, Monday, Wednesday, Friday. We do not touch that position outside of that time period. It makes it very easy to follow, and you'll never get some sort of surprise trade alert, emergency trade alert, or anything of that nature. Tuesday, we're currently playing the SLV Silver ETF with 600 shares. And on Thursday, we're trading the TLT, which has been a monster profit maker for us all year long. And if this China trade deal breaks down, you're going to be very happy that you own the silver, the TLT, and the gold, just like we were this week. When stocks were crashing, the rest of our portfolio put up a huge gain. Now the stock market's flying up, and our portfolio is also going up because of that. If you want to throw out the Tuesday trade, then you can do a 1-to-2 ratio of SPY to TLT and a 10% total asset allocation in GDX. So this will let you get started with a little bit less capital. And if you want to be extra risky and trade with the least capital to start, just take the Tuesday-Thursday trade, 900 SLV shares, 100 TLT shares, and a buy and hold of 100 GDX. Now, if you do want to make sure you don't miss out on future trade alerts, many people watching this are on our expired list, so you get to see the results of every trade as long as you stay a subscriber to our expired newsletter list. But what you won't get is the new trade alerts. So if you want to make sure you get that trade alert, call Dean, 505-322-7515. Let's get you started as soon as possible. Dean's an expert options trader. He's been trading for 14 years. He can help you make sure you get the best results with our program and also offer you a 40% discount on our annual rate because it's Friday. So call Dean right now, 505-322-7515. And don't forget, we have our paid-only membership webinar on Wednesdays and our freebie webinar on Thursdays. Click the subscribe button, click the bell, you'll get the automatic notification of our daily video. All right, I'm going to jump into our track record and then I'll go to the big macro news. As you can see, in our portfolio, we have 37% of our assets in the SPY, which we're trading Monday, Wednesday, Friday at noon Eastern. It's a very quick trade. Current profit generated in this portfolio has been a little disappointing this year, but I think it's going to become the hero trade in October and November as we look at the big picture. And you can see we did pop up to a 1% return after I took the screenshots about 45 minutes ago. So $43,000 in profits from this portfolio, managing 37% of our total assets. Our Tuesday trade has 11% of the total portfolio and has put up a $20,000 profit. Our smaller position in the precious metals and cryptocurrencies has delivered a very large gain this year, $53,000. And the monster is the Thursday TLT trade, $95,000 in profits. If you look at our monthly return, I want to point out what's important is not just the returns we're making, it's the maximum drawdown relative to our returns. So think about it. How much did you lose in December? We made 1.2%. How much did you lose in May? S&P was down 5%. We made 2.2%. How much have you made in October? Our portfolio is already up 1%. The only loss we have is 1% in July. And if you do want to amp up the returns, the best bet is just take advantage of your broker's buying power, and you can double these returns simply by having more shares. So that is the big overview of that. Now, if you do click in the description box, you can find a lot of links. You can look at our advisory program in the first link, the boot camp in the second link, pricing options in the third link. You can read every trade alert we've ever issued. It's not password protected. It's right there for you to check out. Our track record is below that, and today's live stream document is right below that. Okay, so let's look at all the news I've been collecting. Most important thing is I was predicting that quantitative easing would begin in the near future, and this is extremely bullish for stocks and also supports our TLT position. The Fed doesn't buy stocks, but they sure do buy treasuries. And despite not announcing any treasury purchases, they do have to report the levels, and we can see it's gone from $3.78 trillion to $3.96 trillion. Okay, so the repo madness was beginning a few weeks ago, and they're supposed to be just recirculating that same cash over and over again. But apparently they're not recirculating All of it because they're keeping some of these treasuries on their balance sheet. And the rumor is it's JP Morgan and even perhaps Goldman Sachs that are trying to unload these treasuries, of course, for huge profits onto the Fed. They know that they can't get out of these gigantic treasury positions without causing the bond market to crash. And so that's where we're at. The banks need to offload these ridiculous amounts of treasuries and corporate bonds that they've picked up with really no value. Their yields are below inflation for the most part. And now we're seeing the balance sheet of the Fed grow. There's a lot of Fed speak, including Jerome Powell, in about 2 hours. My expectation is the Fed will drop rates in October 30th at the next FOMC meeting, perhaps talk about a one-time injection of liquidity, probably around $500 billion or more, and then the resumption of what Powell said in his last speech, the organic growth of the balance sheet, the natural growth of the balance sheet. So if we look at some central bank data, I'll scroll down to that really quick. Here's a chart of the major central banks, and we can see the Fed is picking back up. My expectation is that will continue. Bank of Japan is just absolutely absurd how much they have in their balance sheet, 5.5 trillion. ECB has been talking about a bazooka of stimulus, so most likely that will turn around soon. And I think Bank of China, they're dealing with inflation with all their consumer goods, and then deflation with all their core products they try to sell in the manufacturing base. So China is in a heap of trouble, and I suspect they're going to have no option but to grow their balance sheet as well. So the big trend coming into 2020 is every major central bank will be dropping rates and printing money. So unless we get a major disruption in the China trade war, and I mean some serious disruptions, it's going to be very hard to bet down on the SPY, which still remains the best place to invest in the world for a real yield, especially ahead of quantitative easing. And I still don't think our bond position is in any trouble because the Fed wants to control the spread on our interest rates compared to other banks. Let me pull up that spread. So we can see our 2-year, 10-year, 30-year U.S. bond. And the best bond to compare it to get a general idea of where it's headed, is the German bond. Not only is the German bond a good indicator of the health of China, because Germany is one of their key trading partners, and we can't trust the data out of China, but it's also a good way to predict what will happen with U.S. rates. And so if we look at the trend, the German 30-year is in a downward slope. In fact, it's in negative territory. So this is a huge spread between the U.S. 30-year, which is currently trading at 2%, while Germany's is trading right below 0%. And you can see the trend for our 30-year is also headed lower. So without the yield on this long end of the bond market spiking, there's really clear coast for stocks. The only thing that could really derail it would be major escalations in the trade war. And we're also not trying to clean up our deficit spending in the U.S., which is going to help keep the consumer and corporations very healthy in terms of spending and profits. So this all leads to an unusual path for the Federal Reserve. And when we pull up the picture of the SPY, let me get that chart of the SPY. Typically, the Fed has reacted a little late. Well, and actually, the last two mini bubbles, which is how Ray Dalio talks about these last few crashes, and you can't even see them in this chart, but if you go back to the '08 crash and the dot-com bubble, these were all self-inflicted bubbles by the U.S. that the Fed was able to try to manage all on their own. And they did this by first cutting rates, predicting that the recession was going to occur, And you can see they were able to do that before the crash and into the crash. However, that did not do enough. And it wasn't until they started printing money, buying up bonds, freeing the bank's balance sheets so they could jump into equities, that they were able to recover those two crises. This time around, this is not a self-inflicted crash. This is something that China has been trying to delay as long as they can. And now their GDP is crashing from 14% several years ago to well below 6%, depending on how much of their data you trust, maybe as low as 4%. And so it's China that's now the big Lehman moment, crashing. It's going to cause all the countries around it to crash, and eventually it'll most likely make its way to America. But not yet, and that's why we see all assets flying from foreign investors into our products. They're going into the dollar, they're going into the SPY, and they're loading up on a record issuance of U.S. Treasuries. So normally we cut rates and start up quantitative easing after we've had a recession and a stock market crash. This time around, we have no such recession. They're reacting to the rest of the world crumbling, and we have no stock market crash. So if I'm correct, and they do continue to drop rates and continue to grow their balance sheet like they already have just in the last 30 days to the tune of $200 billion, the SPY could potentially have a huge leg up from here. Now, there's a lot of things to worry about, which we'll talk about, but that's the big picture in terms of money flows currently. If we look at the TLT, you can see it's trading near all-time highs. My expectation is that the Chinese will not create a trade deal. Now, timing this is very difficult. Do they want to collapse a trade deal now and give Trump ample time to raise hell, crash all the stock markets around the world, get massive QE, and then get a rebound before the election? Maybe. Or maybe they want to lead him on and try to make this chaos happen much closer to the election. So trying to time the next escalation in the U.S.-China trade war is very difficult. We have some action coming next week, and that's what I'm most closely focused on right now. If we get a failure in the trade deal and see some escalation from the U.S. side, like we've seen in the United States UN speech by Trump was very aggressive. We had a rumor, supposedly from Bloomberg and not from the White House, that we may delist Chinese companies, which actually happened in World War II with President Roosevelt. We already have Mark Rubio drafting bills in Congress, and this is all thanks to Ray Dalio, who has probably the most at stake of any American in the world. He has $20 billion of Chinese money and probably even more of that invested in China. So he is certainly not very happy about this. And if you listen to his reports he puts out periodically, he's extremely on top of this. So Mark Rubio is already drafting bills to force the Chinese to allow American auditors to come over there and look at their books. Right now we just have to take them at word and trust that their data is accurate. Meanwhile, pension funds of the military are flowing billions of dollars to China. This is not going to go over well in Congress, and of course is already creating fuss. So we have two major things to look out for. Is number one, will Trump get upset and really go through with the tariffs? And then two, will the U.S. decide to put more sanctions on specific companies in China, or even delist their equities in the U.S. markets? These would be devastating for world markets, be devastating for the U.S. banks who are in bed with the Chinese. So that's the two major things to look out for. Now let me pull up this. This is FXI. This is the large cap Chinese ETF, which primarily targets their big tech companies that we have exposure to. So that's really just primarily Alibaba. Then we have their big banks and their big construction companies. So this is a great ETF to short, either with out-of-the-money puts or by simply buying the Yang ETF. Now the catch is, I believe the Chinese will do everything in their power to not allow this ETF and other products like it to crash much, because they are desperate to continue bringing outside capital from around the world. And this is their ticket to do that. Nobody wants to buy a stock that's in a clear downtrend. That causes selling and fear. People much prefer to buy stocks at all-time highs that are going straight up, like the SPY. So it's at my anticipation that they will be willing to change the course of this yellow line, which you can see has been in a consolidation period. I think they will print a lot of money, and then let me pull up their currency. There you go. This is their offshore renminbi, the CNH. Using the futures market, we can short this currency. You sell it at today's price and then buy it in the future at a discount. So for every 10 cents this travels higher, that's $1,000 profit on the futures contract that we'll be issuing in our bootcamp only membership. And that is because it's a little more difficult and unusual for most of our clients. Most of our clients are very good at options and stocks, but futures are a little bit different. My expectation is that the Chinese will be happy to devalue their currency for two reasons. One, to offset the December 15th tariffs that are about to hit. Two, I think the U.S. may actually up the ante on the current tariffs and push it towards 30 to 50%. If so, their immediate reaction will be to devalue their currency like they have been doing for the past, really for the past year and a half. And so if they want to prop up their stock market and bond market so they can continue bringing in outside capital, they have to give in at some point. And most likely it will be from printing money and letting their conversion rate drop. This may actually be what crashes the world markets. Because when the Chinese devalue, that forces all of the other countries to also devalue. Otherwise, trading becomes unfair. And that is why the US dollar index continues to climb higher and higher. That's also what makes the relative value of US equities and US bonds more and more attractive the longer this goes on. So that's what I'm looking out for. But again, timing's tough. And if we get some good trade news next week, the SPY has all the room to go higher. We have all the central banks getting the ability to slowly unload their treasuries right now, free up their balance sheets, and I believe they'll be going heavy into U.S. equities. Now that is, of course, if the trade war is not escalating. Something else to be concerned about is, of course, the impeachment. Glenn Beck had an interesting video, 2 hours long, put out a huge timeline about all of this. If you do want to watch it, the YouTube link's right here. The story, as far as if you watch CNN, it all starts and ends right here. Trump has a phone call, and he's trying to dig up dirt on Biden and his son to win the election. And that's about as deep as the bunny rabbit hole goes if you listen to most media. If you watch this, these guys put together quite a presentation and give you a much more detailed timeline. I will summarize it for you very briefly. Essentially, it all starts way back here, I think in 2014, where their president in Ukraine is ran out by protesters and all sorts of riots happening in Ukraine. This new guy comes in, and U.S. comes over with Obama and Biden as the lead man, and they're going to help out the Ukrainians who have problems with lots of corruption. And the bottom line was they're going to give the Ukrainians a lot of money to help out a natural gas company, Burisma. And so $1.8 billion is sent to a bank that's supposedly known to be very scandalous. Okay? And that $1.8 billion disappears, literally disappears. This is the fellow right here. And again, if you do want to watch his video, you can watch it. Now this guy, who lost $1.8 billion and also connected to the gas company, wasn't allowed to come to the U.S. for quite some time because of all his corruption, suddenly gets a visa. Interesting. Timeline continues, and shortly after that, this is where Biden's son and John Kerry's son get jobs at this natural gas company. Then the Ukrainians have an investigator who's trying to figure out where the $1.8 billion went and what's going on with this gas company. U.S. comes in and puts together an anti-corruption company, of course, that they're going to manage. And pretty soon, the U.S. is telling the prosecutor that he cannot interrogate the gas company or certain Ukraine citizens. And we've got statements from this fellow saying that he was pressured by the U.S. not to do any investigations related to that gas company because of Biden's son being on the board, and also a group of people who are powerful with the oligarchs of Ukraine. So the story continues, and we get more and more players from the U.S. that are all coming out to Ukraine. And the basic conspiracy from this whole video is that the U.S. was funneling tax dollars to Ukraine, and then primarily Democratic leaders were getting jobs and supposedly funneling this money. We don't have a very good track of where the $1.8 billion went. And the story grows, they fire this guy right here, who's supposed to be the bad prosecutor. And the amount of money that continues to go into Ukraine really ramps up. It gets up to $7 billion. We've got money from the IMF. We have another company owned by George Soros that gets involved. They fire that prosecutor, which is where we have Biden on tape saying he pressured them to fire that prosecutor, otherwise their money wouldn't come through. Then we have a special lady that gets put over there to start investigating Paul Manafort and Trump as the election's beginning. And this is before anything has come out about all of that. Then the prosecutor gets fired, and they get a new prosecutor. And unfortunately, this guy is very upset about all of this scandals and tries to bring 7 things to the Department of Justice. But this lady right here blocks them, says they will not come to the U.S. and talk about, there's 7 items that they wanted to discuss. And so Trump comes to power, fires her, calls their new, and then we get a new surprise. They thought that the current president would remain president, but he gets elected out, and you get a new guy in who has no ties to has absolutely no ties to all these Ukrainian oligarchs, and that's when Trump calls him up and says, hey, we got to check out all this corruption. So that's kind of the story that's unraveling. If you listen to Rudy Giuliani, it's very similar to that. So anyways, that's what I've been able to come up with on that scandal. And so for now, I don't think that will affect stock market. But we'll see. Keeping a close eye on that. Other headlines I have collected. Oscar, not to worry, Jason, the honest princess, it'll clean this all up. Yeah, that's funny. I have some good tweets from Elizabeth Warren. It's looking very clear. It'll be Trump versus Warren going into the next election. So I'm now subscribed to all her content. We'll keep a close eye. And she's putting pressure on China too. So now it's very questionable if China, what China's move will be, knowing that we have both the Republicans and the Democrats now on this anti-China bandwagon. Also, the story in Hong Kong is escalating. They're now banning these masks, which just got through the court system overnight. And so we'll take a look at that in a minute. Big news today was the Goldilocks employment report. Not too hot, not too soft. Stocks loved it, popped up today. Trump, unemployment rate at 3.5%. Wow, America, let's impeach your president even though he did nothing wrong. Here's a look at your non-farm payroll change. So just steady jobs piling in. Canada's PMI dipped below the 50 mark. Here's that Treasury balance sheet popping up after trying to sell off a little bit. They sold something like $1.6 trillion. And then that crashed 98% of all markets around the world in 2018. And so they're back to printing money. Here's that chart once again showing $200 billion just in the last, really these tick ups have only been since the 16th. And then again on the 2nd that they've been updating these data points. Kudlow says U.S. poised for a much stronger economic story just as soon as QE is launched next month. Kudlow says possible U.S.-China trade talks next week could show progress on opening Chinese financial service markets. The president is abusing our diplomatic relationships to demand foreign interference in our elections. Donald Trump must be impeached. That's from Elizabeth Warren. White House advisor Kudlow says deputies in U.S.-China trade talks to meet Monday and Tuesday, principals to meet on Thursday and Friday. John, what's been debunked? I'd love to know. The missing $1.8 billion, all these people that are working there. I think it's pretty well documented. So I don't think that's true. Crypto is set up for a major boom. Does seem like there's been some pressure trying to hold it back. We've seen China doing massive capital controls to try to keep all the money they have in their economy, and I would suspect that could be holding this back slightly right now. We're still remaining a 1% position in Bitcoin and a 1% position in Ethereum. Dollar index remains strong. Chinese currency, again, we're waiting for the nail in the coffin. I need to see the trade war escalate, trade talks fail, and that's when we're going to put on our futures position on CNH for the bootcamp members. Gold is trading at a relative high over the last 5 years. That's why we switched from GLD to GDX. So we went from spot gold all year till we got to extreme highs, then we rotated into GDX. The miners are the ones that can profit from these very high gold prices. So my expectation is central banks will somewhat put a ceiling on the price of gold, and now it's the gold miners who can generate the profits. Silver is not at an all-time high relative to the last several years. That's why we're playing SLV currently. So I'm expecting silver to jump above 20, probably towards 22 to 25, which will generate a very large profit for our Tuesday play. At that point, we will do the same concept and rotate from silver, SLV, into the silver miners, SIV. So same idea. We got to be patient. We got QE right around the road. In fact, they're already doing it. Now we need the rest of the world to continue the same path. And any escalation in the trade war, I think we'll see money start to really pile into silver and gold. So again, silver has some catch up to do to get towards new highs, just like gold did. And that's why we're playing SLV currently. SPY looking super healthy. And we've got lowering rates and money printing, so this could really shoot up significantly higher. TLT has the puts, the Powell put. They're buying up the treasuries. They're clearing these off the bank's balance sheets. That's going to give us a lot of ammo for the banks to go in on the stocks. GDX, you can see tremendous trading volume and a nice bullish trend. If we get back towards the 2012 levels, we'll be at 66. The amount of money that's been printed and created since the last crisis is insane. In fact, let's just take a quick look at that. So in 2008, before 2008, the total amount of debt that we'd swept under the rug, per se, was under $1 trillion for the Fed and for the Bank of Japan. It was $1.5 trillion for the ECB, and it was already at $1.7 trillion for the Bank of China. Okay, Obama comes in, bails out the banks. What happens to the money supply? Within the next several years, the money supply goes from $1 trillion in the Fed's bank sheet to $2 trillion by 2009, all the way up to $4 trillion by 2014. So that, my friends, is what has created this whole problem, and why the amount of money they're going to have to print now is going to be significantly higher. And this is just the balance sheets of the central banks. This doesn't count the government debt, the corporate debt, the consumer debt. So the look for gold and silver right now and cryptocurrencies is extremely bullish because of that. The next thing we got to look at is, can the corporate buyback circle continue? Well, as long as LQD is trading at this level, the top companies have free access to capital. In fact, Microsoft is getting negative rates on their bonds by going to foreign markets, so they can actually get paid to borrow money and buy back their own stock. So it's going to be very hard to get a stock market crash when we have free credit for corporations to buy back their own stock. We have a government creating tremendous deficit and selling that deficit at very low rates very easily because the rest of the world's collapsing. We've got the consumer and no problem at all. So there's really nothing standing in the way of the SPY at this point in time. Now, the Russell 2000 and the junk bond market is not quite as strong, but I suspect it will pick up in the next several months. So we can see HYG is your junk bond ETF. IWM is your Russell 2000. So they're healthy, but they're not looking as strong as those top companies like Microsoft, Apple, etc. that are held in the top of the SPY. EWY is your South Korean ETF, smaller country. Main company is Samsung. They do tons of electronics, and so when their economy is slowing down, that's another telltale sign, just like watching the German bond. And that's the big picture, guys. So we remain long the TLT in case of major escalations, and also playing the general trend of the central banks, which will be to lower these rates and print money. They're going to support the bond market, not going to let it get out of control, and that's going to free up the banks to jump into stocks. Meanwhile, quantitative easing has been very bullish for that barbaric relic gold, and I believe silver has So yeah, Manafort investigation is well covered in that video, John, if you want to watch it. But there's other people who are investigating that were doing the same work as Manafort. So I definitely suggest you watch the video and make your own judgment. I haven't seen anything else that comes close to the amount of research that show put on it. It just came out last night, so there's no way that much of that has really been analyzed. And they talk about it. They want people to try to find anything wrong with their timeline or their story. They have links to everything in the documents. All right, guys, so that's a wrap. Let's take a look one more time. We're up 1% in October. My expectation is the impeachment fears will disappear. I think the only big concern for us at this point right now is primarily, will the China-U.S. trade war blow up in our face? If so, the bond portfolio is going to pay off again. the precious metals will pay off again. If we have a period of peace, I'm not too worried about bonds or precious metals pulling back very much. They may even go up because we can see the Fed is buying up treasuries to the tune of $100 billion last month and already $100 billion just in the first 3 days of October. They're lowering rates, most likely going to be announcing a one-time injection of money, probably around $500 to $1 trillion, and then a nice, slow, steady $40 billion a month of bond purchases. And that's all reported to thanks to Goldman Sachs. So that's our strategy, and we're sticking to it. Thanks, Oscar. Hope you have a great weekend too. Does anybody have any questions about our portfolio or our plans? I think I had one more. The only other thing I want to point out was Elizabeth Warren is touting how they need to protect the Hong Kong people. So it does seem like we do have pressure on China from both sides of the Democrats and the Republicans. So that definitely adds some more pressure onto China and makes me wonder if we can get a deal. So big what if. We're protected either way. We've got the puts below the SPY. For the time being, it looks like SPY is going to march much higher as we look at the big picture. Let's see where we're at right now. Yep, still trading up there. All right, guys. Well, thank you so much for your time. Have a great weekend, and we will have another trade alert on the SPY come Monday.